Okay, well, it is mid-October and Thanksgiving is over, and I normally do this video at the beginning of October, so I'm sorry I'm a little bit late, but of course you're dying to know what's going on in the real estate market. So I wanted to start with really just giving you kind of the overall view of what I'm seeing, and then we're going to drill down into some of the numbers here in a moment in this video. But we've noticed as we're coming into the fall, we've continued to see higher than normal levels of inventory, and we're seeing obviously sales volumes that are lower than last year. And I'm getting feedback from people all the time, well, it's a buyer's market, things have really slowed down. And I just want to clear the air. We haven't really slowed right down to a halt here. Yes, we're seeing lower sales volume, but relatively speaking, it's still not a bad market. Now, let's just focus a little bit on my impressions of why we're seeing a little bit more of a slowdown. You know, this year, it's been a bit of an interesting year coming into this year. We had an election, federal election. We had a new president in the United States. We've continually been in talks with them on tariffs. It's created definitely some feelings by some that we're not really sure where things are going. So markets generally don't like uncertainty. But here's the silver lining in all of this. I think more and more people are starting to realize that life is going to go on, whether we make a deal with the US on some of these tariffs, but our economy is still humming along. And I'm very happy to see that the interest rates have started to come down. And I just spoke to our representative from RBC, and he's very in tune with what's going on in the interest rate world. And he's pretty convinced we're going to see 2 more drops by January. So our government understands the importance of real estate in all of Canada, certainly right here in Calgary. We need a healthy real estate market. And some people have been walking around saying we're going to see, a 20% drop in prices. I don't think that's going to happen, especially when the average person living in Calgary who's bought in the last 5 years doesn't even have that kind of equity. So you can't sell a property for 20% drop if you don't have the equity. And add that to the fact that interest rates are dropping, and I think you're going to see more buyers coming into the market. So rather than sitting around and waiting for prices to keep coming down, which I'm not saying they won't, there still might be a little bit more of a correction here before this is done, but take a look at the opportunities that exist. And please, you need to factor in the interest rates in the equation. So many people get focused on price. They don't think about interest rates. I've seen people pay higher interest rates with a lower price, and that's still more money out of their pocket every single month, paying a little more and having a lower interest rate. So you want to understand the math. And if you want a little help with that, all you have to do is reach out to me and I'll walk you through it so you really understand it. I've worked with a lot of people in the mortgage world to understand what you should do on making decisions on timing and definitely looking at interest rates.
All right, let's just jump into the temperature of the market that we saw in the month of September, and we are looking at apartment condos right now. You'll see that it's not great. 20.06 listing absorption rate, and that simply means you have only about a 20% chance of selling your apartment condo right now. And we've been here before, and we're now here again. We're officially in a buyer's market. And that means if you're going to sell your condo, you're going to have to be priced right. You're going to have really good marketing and make your condo look its best. This is not a time to speculate, for sure. $322,900 is the benchmark price that we saw in the month of September 2025. So you can see that with anytime you're in a buyer's market, you're going to have higher levels of inventory and lower sales, and that means some price softening. It doesn't mean that the bucket's going to fall out of the bottom, or the bottom fall out of the bucket rather, but it definitely means that there's going to be some softening. So if we look at right here, You can see where we're at in 2025 for our benchmark price at 331, and you can see that we were at 336, and that's what I'm talking about. Even though, you know, we're softening, we're just not losing a tremendous amount of value, because I will tell you what's happening right now is there's some people that are going on the market with their condo. They're putting it at the price that they're hoping that they can get for it, whatever that number is, and the market may not give you that price. And some people are basing it on maybe what they paid if they bought it maybe in the last couple of years. Maybe some people are basing it on how much they owe. Some people even base it on what their debt is. People put prices of their real estate for all kinds of reasons. But what's happening though is a lot of these people, rather than reduce their price to sell it, they're not that hungry to sell it. So they just take it off the market, let the listing terminate, and they'll probably try again in the future. And that's what we're seeing more and more of right now. All right, well, let's look at townhouses. Pretty similar as to the apartment condos, but little better absorption rate. So we got a 27.6% chance of selling your townhouse in Calgary, and that's really on the cusp of a balanced market to a buyer's market. But you can see how in the last 12 months it's really been a little bit up and down, but overall it's just softening. Our benchmark price for last month was $437,100. So, you know, you can get some pretty decent townhouses in Calgary right now in the $300,000 range. I just sold one in the Northeast, which would be a fantastic rental property if you're looking to find something like that. I sold it for $325,000 with a finished basement. So there's still some pretty good value out there, depending on where you are looking in the city. And if we come down here, you'll see this is where we're at so far this year. We're at $447,000. So same thing, just a little bit of softening, but nothing to worry about too much when it comes to price corrections. So here we're looking at the semi-detached listings, and here our absorption rate right in the same area, 25.28%. $684,800 was our benchmark price for a semi-detached in Calgary last month. If we come down here, you can see we're at $689 for the year, which isn't too bad. Here's some of the hard numbers. Looking at these, that's 156 out of 617 that's sold, and we're averaging about 37 days to sell these properties. Now, let's just take a look at the numbers that I like to look at, just so you can see what the sweet spot is. And we're $500,000 to $600,000. That's 27.96% of the market. When you're looking at these, and we didn't look at this on the last chart, but for townhouses, the dominant price is $400,000 to $500,000, and it's $300,000 to $400,000 on condos. So this is this hasn't really changed a whole lot. But what I also like to look at, I'm always paying attention. What about the luxury market? And it's still fairly healthy, 11%. You know, these are when you get into $800,000, $900,000, and $1 million for semi-detached. Obviously, these are all luxury semi-detached in the inner city where the old house was tore down and these new ones were put in. And you can see there's some pretty good demand still for that product. People like it. They buy them. A lot of them even have suites in the basements. I've sold quite a few of them this year, and you know, the demand is still there, although I will say there's a lot of selection, because it seems like when the times are good, a lot of people get into the building business. So a whole bunch of building permits were ordered in 2023, and now the project just got finished now. So with the market softening and higher levels of inventory, it is showing up, and I noticed that it's taking a while for these to sell, and that's why we're at 37 days. So here we are for detached. Similar story. It's amazing that, you know, it wasn't long ago this was at 70%, but now we're at 26.84%. So I'm going to sound like a broken record when I say this, but I've been here before because I've done this a long time, and this is not, by the way, a terrible market. Some of you might look at that and go, oh, that's terrible, that only a 27% chance of selling my house. It's not terrible. There's still if you look at the volume sales, we're not dramatically less than where we were. And we're going to get to that in just a minute. I'll actually show you the data. So there's still a pretty good demand for buyers to buy these properties. It's just that we have a lot more inventory. And I'm telling you, a lot of these houses, people that are out there, they are pricing them at a price that they just simply want for whatever reason, which is, slightly higher than really where it needs to be. And when you're a buyer and you've got lots of choice, you're not going to buy a property if you can find something similar that's comparable, pretty comparable, for a lower price. It's that simple. So your house won't sell. Or take a look at the condition. I mean, I think I shared this in a recent video with this buyer I worked up in the Northwest. I couldn't believe how many people didn't even make their bed and just didn't prepare their home properly just for a viewing. And I think, in a market like we're in right now, if you want to be a seller, you got to treat every single showing like it's your first date. Okay, you want to show up, wearing your best suit, so to speak. Look your best, comb your hair, present yourself professional. And you want to do that with your house for every single showing. This is the kind of market like this is. You can't afford to have a showing and not take that extra time to clean everything up in the kitchen, vacuum the carpets, whatever. You have to do that. And if you have an old paint job, I'm telling you, paint goes so far to update your painting. Or if your carpet is in poor repair, do the carpet. That's why we have this new revitalization program that we offer, where we'll do the painting and the carpet for you up front. You don't even have to pay for it until the house sells. So just keep that in mind and reach out to me if you have questions about that. There's our benchmark price, $749,000, and you can see that's last month. And overall, we're right around that same number. So that's still, like I said, a pretty healthy numbers. We're seeing that the prices are holding. I know there's some people out there that have come to me and said, "Oh, I really think that we're going to see, a 10% drop in real estate prices," and anything is possible. But when you take a look at how much people owe on their properties, for all the people who have bought, in the last 5 years, a lot of people have some pretty high mortgages on their properties. They're not in a position to, sell the property for lower, even if they wanted to. They just can't. So that's not going to happen. And secondly, there's a lot of people out there, they might like the idea of maybe moving, but if they can't get a reasonable price for their house, they'll just take it off the market and not sell it. So those two mindsets really is what keeps the pricing to be pretty consistent. So I think we will see just a little bit more softening coming into the fall and into the winter months. But I really think if you're thinking we're going to see a 10% drop, the likelihood of that is quite low. Moving down here, so that's 859 out of 3,201 that's sold, and now we're at 38 days on the market. And you can see the sweet spot continues to be that $600,000 to $700,000 for a detached house. But you can also see there's still houses between $500,000 and $600,000. If you're in that budget, there's quite a few there, and quite a few if you're looking for a rental house that you can find in those numbers as well. So when you really look at the major markets across Canada, we're still a pretty affordable place in Calgary. And our $1 million to $1.5 million, it stayed very healthy at 10.62% of the market. So we got a pretty good demand for luxury real estate still. So just these numbers really help me understand and have the confidence that no matter whatever time you're looking at for real estate, it's never really a bad time to buy more real estate. I know people always ask me, is now the right time to buy? And I say, well, 10 years ago would have been the best time, but the second best time is right now. Over time, real estate continues to be a good investment, and I think that if you're really looking to find a property right now, why not take a hard look at the market? There's such a good selection right now. I'm finding there's some opportunities that are coming up pretty much every week where I'll find something that I would say is really good value, depending on the price range that you're in and where you're looking. But I can tell you, I got a keen eye for this stuff, so I like these kind of markets where you're looking for good opportunities, because there are a few people that are maybe a little more motivated than others, and you can pick up a good property for a pretty good price right now. Okay, I'm going to wrap up by just showing you just what's gone on in October so far, and you'll notice right here that number 919 sales. That is down from 1,025 in October 24. And that October 24, interestingly enough, was even better than October 23. So that's a 10% change in volume, as I mentioned earlier. So the volume isn't bad. Where we're feeling it, again, is right here, 6,902 listings, and that is up 32% from last year. We're up 96.41% from October of 2023. That's why there's opportunities out there, because there's a pretty good selection of homes to look at. So far this year, we have sold 19,151 on the MLS, and that is a 15.71% drop from last year. That's not terrible. You know, by the way it's looking, since we're at 19,000 now and we've pretty much got 2.5 months left, we're probably going to see somewhere in the neighborhood of around 23,000, maybe 22,000 sales, which is going to be pretty close to the 2024 year to date. I mean, we're not that far off hitting 22,721. We pretty well could hit that in total sales for this year. And I think that might surprise a lot of people, because I'm just hearing it all over the place. Oh, the market's soft. But when you look at the volume sales, we're not that bad. We're on pace to do what we did last year. It's just like I was showing you, this big number right here of 6,902 listings. That's why the perception is it's soft, because they're seeing a lot of houses that aren't selling, but the demand is similar. So this chart I'm going to show you real fast, and you can tell I'm a bit of a data freak. I love looking at all kinds of different data, and I think that's one of the reasons why I can be pretty helpful to people, depending on, you know, whether they're looking at real estate as an investment or whether it's just a house to move into. But our 2 stories in Calgary, we did 8,842 sales in the last year, with an average sale of 753 and a median sale of 685,000. You'll notice that our sale price to ask price is about 98%. And if you go to bungalows, we sold 2,944. And that's significant, because we have a pretty good amount of areas in Calgary that have bungalows, and it's got a pretty good demand. And you notice the days on market are even less than 2 stories. And the average sale price at 732 and a 665 mid price is not that far off the 2 stories, and even the sale price to ask price is pretty close. So we have a pretty good demand for bungalows, and I think we're going to continue to see that with the aging population. There's more and more people that are over the age of 55. A lot of people retiring that are liking the idea of being on one floor. And apartment, single level units and apartments, you can see there's a lot in Calgary, but our mid sale price is $315 and $319, and pretty good demand for those. I mean, I think, my opinion, we have maybe a little bit too many that are built, so good demand, just also higher levels of supply. Anyway, I just wanted to throw that into this video today just to give you an idea. There's all kinds of data I can look at. I subscribe to this company that gives me access to all kinds of really cool information. So if you wanted me to drill down on any particular neighborhood or drill down on any particular style of home, if you're really looking at an investment and you really want to take a look at what is the projected rate of return on that investment, all of this data can be really helpful. So hope everybody has a wonderful rest of October, and I'll look forward to doing the next video next month.